Hey everyone, this is Purti. Today let's dig further into technical analysis for trading. One of the fundamental things to know about the stock market is understanding the price action. Mastering the price action could mean the difference between being a successful trader or becoming a failed trader. One of the fundamental reasons why the price of the stock moves is because of the buying pressure and the selling pressure. If the buying pressure is higher than the selling pressure, the prices of the stock go up, indicated by a green candlestick. And if the reverse is true, the prices of the stock go down, indicated by a red candlestick. So you may ask, what affects these pressures? Some of the common reasons which affect these pressures are company news. These are news-driven events like news on the company. For example, the company decided to acquire another company X to expand its presence or increase its market share, making the company more valuable. Next is the earnings report. Companies need to report their quarterly earnings to their investors, and these push the stocks higher or lower depending on the quality and the forecast of the earnings report. Remember that the stock market always prices the stock as to what the stock might probably do in the future. Next is the analyst's upgrade. These are typically in terms of upgrades or downgrades of the stock issued by analysts of hedge funds or index fund companies where they carry a certain position on the stock. Typically, they come in the form of neutral, underweight, or overweight, depending on what they feel about the profitability of the company is. Next is the news events. These are events which affect the overall market or a segment of a market. For example, relating to housing industry news like existing home sales create record quarter could propel all housing stock upward in the short term. The catalysts change the market outlook on the stock, that is bearish to neutral, neutral to bullish, etc. Now, all these catalysts propel or crash the stock depending on the news. Hence, learning about them is worthwhile just to get a grip on what kind of news affects stock in what way. Now, you're not going to get specific company news all the time. Sometimes it's news of the sector that propels the stock, or maybe sometimes news of the economy. All these factors go a long way in establishing supports and resistances, like what I had spoken earlier in my videos. But one of the important concepts of trading is understanding what oversold and what overbought is. To help illustrate this, think that you are driving a car on a highway and you're pushing on the gas. The more powerful the engine, the faster you pick up, but you burn a lot of gas. The longer you run, the more gas you burn, and eventually you park at the gas station to fill gas. Here you don't really go anywhere but just chill out. Now, let's say a stranger approaches and tells you that there is treasure if you head straight. So what you do is get into the car, hit the gas again, and drive away in that direction. The car here is your stock. The gas in the tank is the buying pressure. The distance covered is your gain, and the stranger is the catalyst. From a trading perspective, identifying when the stock runs out of gas is paramount to us. If we get into bullish or bearish positions at these points, there is a good probability of riding the trend. One of the key technical indicators is the RSI or the Relative Strength Index. An RSI of 70 plus is generally considered that the stock is in the overbought territory, and an RSI below 20 is considered to be in the oversold territory. A bearish position in overbought territory and a bullish position at the oversold territory can guide you towards significant short-term gains. Another important indicator is the exponential moving average, typically denoted by EMAX, where X is the number of candlesticks. Basically, the EMA line is when you take the price of the stock for the last X days and average it. These lines offer significant points of support or resistance to the stock in the short term. One rule I drilled into myself is that larger the X, bigger is the support or the resistance points. Usually the EMA 9, 20 or the 50 lines are typically used, where the EMA 50 support is much stronger than an EMA 20. An important point is to learn the moving averages crossover, that is the EMA 20 crossing over EMA 50 on the upside or on the downside. An upside crossover signals a strong bullish trend, whereas a downside crossover signals a bearish trend. Now let's look at another technical indicator, MACD, short for moving average convergence or divergence. It is designed to reveal changes in the strength, direction, momentum, and duration of a trend in a stock's price. From a short-term perspective, the MACD consisting of the signal line, that is the EMA 26, and the MACD line, that is the EMA 12, that is the points of crossover, are indications of bearish or bullish trends. Let's take a look at the stock AMAT and see the mechanics of the EMA, the RSI and the MACD. The blue line indicates EMA 9, the yellow line indicates EMA 20 and the red line indicates EMA 50. Moving on, this is the RSI. I have drawn two lines here. One is the 70 line and the other is the 30 line. Any line above the 70 line is considered to be in the overbought category, and anything below the 30 line is considered in the oversold category. Next is the MACD line. There are three lines here. One is the purple line, which is also the zero line or the average line. The blue line is the MACD line and the yellow line is the signal line. The histogram here, which you can see, represents who are in control. The green histogram represents that the bulls are in control and the red histogram indicates that the bears are in control of the stock. The distance between the zero line and the MACD line represents how bullish or bearish the stock is. Let's play out a scenario for AMAT. AMAT is currently trading at 86.30 and it has touched the EMA 20 line. The EMA 20 and EMA 50 line offer good support and you can expect the stock to go back up after touching these lines. Let's look at the RSI indicator. The RSI indicator has shown that the stock has been in the overbought category for a long period of time and it is now correcting itself in the neutral zone. So this means that the stock is not as expensive as before. Now let's look at the MACD line. The red histogram here indicates that the bears are losing steam as evidenced by the shortening lengths of the histogram bars. So it is possible that the bulls might come in control and the stock can turn bullish in the short term. Just a disclaimer, I'm just a dudette on YouTube and I make this video for education purposes only. This is not to be considered as any financial advice. There are tons of technical indicators and you could learn them at stockcharts.com and search for technical indicators. A cautionary note is that technical indicators need not be followed all the time. It all depends on the personality of the stock. A stock like AMAT, which is not super hyped, tends to trade technically. However, a stock like Tesla doesn't really care about the oversold or the overbought categories. That's because Tesla is considered a super sexy stock to own amongst millennials, and its moat of a disruptor and an innovator rubbishes all of the technical indicators. In general, I find that the most successful traders are people who read general market trends, do fundamental analysis, and learn about price action. Technical indicators are there to aid you in your position of the stock. Going back to the car on the highway example, you always want to pick the right road to reach their destination and view the indicators for fuel, light, tire pressure, headlights, etc. to aid you in your journey. Let me know what you think of this video and post your questions in the comment sections below. If you like this video, don't forget to like, share and subscribe, and hit that bell icon for more videos on financial literacy. Thanks for joining me today, and I'll see you all in my next video. Bye-bye.